Hey guys, it's Kenton Becker with Land Home Financial, and I'm here again with another weekly video tip for you. Now this week's tip, I want to talk about getting back to the basics, the different types of mortgages that are available out there. Depending on your situation, there might be one type of loan or type of mortgage that may work best for you. We're going to cover a few of them here, and I'll give you some of the pros and cons. Maybe you can kind of see where you may fit into one of those options. But ultimately, there may be even a couple options here that may work for you, so it's best to talk to your loan officer or give me a call and we can actually go through it with your individual situation to see which one works best. We're going to start with conventional. Conventional financing has some great pros and cons. One of the best options with conventional is it offers great rates. You have options like down payment assistance. You've got some really great things about it, but one of the biggest benefits actually has to do with the mortgage insurance. Mortgage insurance is required if you're doing less than 20% down. However, with conventional financing, it's not permanent. You can actually get rid of it after as little as 2 years. Now, most home buyers are able to get rid of it somewhere between 3 to 5 years, but it is still something that you can lower that cost on your monthly payment by getting rid of mortgage insurance. So that's a huge benefit. The downside to conventional is that sometimes it's a little bit harder to qualify for. You do kind of need the better credit scores to get the better interest rates. You can't have the past bankruptcies and blemishes and other stuff. It takes a little bit longer if you do have a foreclosure or bankruptcy before you're eligible for conventional financing again. So it's a little bit harder, more challenging to qualify for. Now the next option is FHA financing. FHA is kind of that great option if you do have some past issues on the credit. If your credit scores are a little bit lower, FHA is the perfect fit for you. It offers great interest rates, zero down, so a lot of the same benefits as conventional. But the biggest downside to FHA is that mortgage insurance that you have to get, it's permanent. You can't get rid of it. You can't increase your value or pay more to try to get rid of it. It's just going to be on there if you have that FHA loan. You could refinance away from it in the future, and we do see a lot of clients that do that to get out of the FHA loan. But that's just a consideration you have to take if you are getting into the FHA loan. Okay, the next option I want to talk about is VA financing. Now, VA hands down is one of the best options when it comes to financing. However, it's only reserved for veterans, so active duty or retired military. At the end of the day, if you've served in the military or are serving in the military, you have one of the best options out there. Now, VA financing offers zero down, some of the lowest interest rates that we've seen, lower closing costs, no mortgage insurance. It's pretty easy to qualify for too. You don't have to have the best credit or credit scores or credit history. So really, it kind of takes the best of all these options and puts it into one loan. But it's exclusive for veterans. So if you haven't served in the military or not currently serving in the military, you can't get access to that program. Okay, the next option I want to talk about is USDA financing. In a previous episode or previous weekly tip, we did talk a little bit about USDA rural loans. USDA has some huge benefits. Number one, it offers zero down financing, some great interest rates. It's fairly easy to qualify for, kind of like FHA and VA. It has great closing cost option. The downside to USDA is you have to buy in a rural area. So for you, if you're looking to buy in more populated areas, cities, things like that, it's not going to work for you. But if you're looking to move a little bit further out, kind of in the country area, then USDA financing is a great option and definitely something you should consider if you're buying in one of those areas. The last option I want to talk about is jumbo financing. Jumbo financing is something that really only works if you're up to a certain dollar amount or a purchase price. If you're looking to purchase a home where your loan amount is going to go over $726,000, it's actually a very specific number, $726,525. If your loan amount goes over that, you are going to be in a jumbo loan. And that requires 10% down, usually down payment, a little bit better credit scores. However, jumbo financing does have great interest rates, so that's kind of the trade-off. But at the end of the day, you kind of know if you're going to fit into this category depending on the size home that you're buying. If you're buying a $300,000 or $400,000 home, you're not in a jumbo category. If you're buying an $800,000 or $900,000 home, you do fit into a jumbo loan. So that's something you need to consider when it comes to your down payment, your credit score, and other options. Okay, so hopefully that helped you guys to understand a little bit of the different types of mortgages that are out there. If you have any questions above and beyond what I talked about here, definitely reach out to me, give me a call. I'm happy to answer your questions and see if there's a good option here that would work best for you. So thanks so much for joining me this week, and have a great week.